This is Eric Moth with Moth.com as we come to the end of the week, options expiration week, end of the day. This is how markets are closing for the day. What has been a good week, markets recording all-time highs, as we shall see here in a second, as the market is settling out. And even as the market is coming off the highs for the day, we can see that the S&P 500 did close at an all-time daily closing high. So did the NASDAQ, closing at a fresh all-time daily closing high. And also, even though the Dow did pull back off the highs of the day, the Dow managed to close at the highs, all-time highs at the end of the day. For the week, the S&P 500 was up 1.65%. For the week, the NASDAQ was up 2.18%. And at the end of the week, we can see that the Dow was up about 1%. All of them closing at fresh, all-time, weekly closing highs. Now, guys, in my opinion, there's no need to complicate this. As we discussed in the last weekend market analysis video, as long as the daily for the major averages are trading above 69.1 on the RSI, expect this market to start picking up momentum to the upside. That's just how it works. So the S&P 500 came into the week with the RSI close to 69, if not above 69.1, and now we've pretty much held on above 69.1 this past week, which might explain why we are picking up momentum. Now, if you don't understand this phenomena, the market's move can be confusing. But you expect this type of a move when the market is trading above 69.1. Take a look at the NASDAQ. Again, for the entire week, I believe, was holding above that threshold of RSI 69.1. And of course, we can see the result of this is picking up momentum. Pullbacks are slight, if any, during that phase. Now, keep in mind, as we end the week here, the Dow closed just below 69.1. So, in the new week, it all depends on whether it can hold above 69.1 on the daily. This is the daily. If it creeps back and holds back above 69.1, expect this market to pick up momentum yet, even with this current up move. Now, if we start seeing a stall, then rejection around 69.1 can be something we can use to gauge where the market wants to go. In other words, the key for this market is RSI 69.1. Above that level, and the bulls are firmly in control. Now we take a look at the weeklies. Again, if you want to keep this as simple as it gets, we can see here coming into the week, the RSI for the S&P 500 was above 69.1. And we know that when the market is holding above 69.1 on the weekly, it tends to suggest that the weekly chart is going to have a strong bias to the upside with potential for picking up even more higher ground. In other words, with potential for picking up momentum with an accelerated move. Take a look at the NASDAQ. Again, holding above 69.1, the behavior is exactly what we expect to see, which is a pickup in momentum. Now, if you know this, you know that this is not a period where you want to go short the market. In fact, it's a period where you should be an aggressive buyer of breakout stocks. Speaking of breakout stocks, take a look at some recent Moth.com stock picks. A breakout here with the alert issued somewhere around there. And this is behavior you see only in a strong bull market. I mean, that's why you should be aggressive when the market is showing strength. So, a nice move here. When you see that these types of moves, you know that the market is very toppy. And of course, at some point, things are going to change. This market is going to have to reverse. Here's another recent Moth.com pick. Let's do one more. Again, another recent breakout pick. And this one continues to climb. Now, the point here is that the market is so strong because we have the moving averages holding above RSI 69.1. Or the RSI is holding above 69.1. That is when we should be aggressive. Now keep in mind, again, the Dow is lagging a little bit, and the Dow has an opportunity And of course, it's a big question as to whether it's going to be able to also move above 69.1. So here it's actually very simple in my opinion. If the Dow can climb above RSI 69.1, this is a market that is scary strong. If the Dow cannot hold above 69.1, then that is something we can use to give us an indication of market direction. So above 69.1 on the Dow on the weekly, very strong. Keep in mind, there is this RSI level here that we've been watching for potential resistance. And this is where we had broken below this level late 2018, resistance here in July. And now we are above this level. So as we pointed out in the last weekend edition, as long as the market is above that level, then this is clearing this resistance line. The next task for this market is moving and staying above 69.1. If it can do so, be on the lookout for a pickup and a strong pickup in momentum as a sign of a market that is trading above the blue line. And more importantly, if it trades above 69.1, that is a sign of a out and out bull market that one needs to take advantage of. And we can see evidence of the power of RSI 69.1 and the need to understand this, because a lot of people don't understand this. But you can see here generally holding above 69.1 gave rise to this substantial, very strong uptrend in the market. Of course, this is ideal for bulls. This is where you want to be aggressive. And all that took place while the RSI was trading, for the most part, above 69.1. Take a look at the S&P 500 in that time period. The biggest move came here. Clearly, trading above 69.1 was the indication of a substantial potential to the upside. And now we can see we are above 69.1 again. Take a look at the NASDAQ. And the NASDAQ had us pick up in momentum here late 2017. You notice this corresponds very well with the RSI holding above 69.1. Now, don't be tired of hearing that RSI level being mentioned, because right now we can see that on the monthly chart for the major US averages, the RSI for the SPX is just under 69.1. Now, good example of what happened in 2017 here. We clear that 69.1 level and we have a very strong 2017 bull market right here. As we held above 69.1, we recaptured it again here for this uptick. Now, take a look at that's the S&P 500. Take a look at the NASDAQ. Trading very close to 69.1 at 68.75, thereabouts. Take a look at this nice example of what happens when your RSI stays above the threshold of 69.1. Oh, by the way, if you don't know where I get that number, there should be a link in the description of the video, or take a look at, there should be a playlist. It's going to be either in the description, if I remember to put it there, or you can just search for this playlist. There's a sample explanation of where I get these RSI levels, or you can get the full paid version of this by subscribing to my website, and I have all this again, RSI 30 and RSI 70 explained is the playlist. Of course, the full playlist is going to be on my website. All right, let's go on. So again, what happens in the coming months is going to be dependent on whether or not bulls can move the monthly chart RSI above 69.1. If the bears want to get hold of this market, they need to show RSI 69.1 rejection. Now take a look at the Dow. The Dow is a little bit lagging, but who says that it's not going to be able to capture the 69.1 level in the coming months, but that's something we can watch. Also, the Dow has the possibility of showing resistance here. Now, this was the break point in terms of a trend line break right here, and this has been a level where the Dow has struggled since this break. There was resistance here at the end of April, and so whatever happens on this blue line is going to determine the next major trend. Of course, bulls want to clear that level so the market can advance and pick up momentum. Otherwise, bears have the task of ending this run around here, stalling on the blue line and pushing the RSI lower, which would bring the market substantially lower. So whatever happens around this blue line should determine the next major multi-month direction. And of course, the Dow gives us a beautiful, beautiful looking chart in 2017. All this as the RSI had held above 69.1. By the way, the Brazilian market, the BVSP, has been holding above 69.1 for most of 2019, and you can see the behavior of the market has been generally to the upside. Pullbacks have been there, but they've been shallow and short-lived. So again, that threshold of 69.1 should be a level to watch as guidance, because anything above that is a market to be aware of in terms of ability of recording substantially big and fast moves to the upside. Otherwise, it's not the kind of market you want to be short, because pullbacks tend to be very shallow, and of course, new highs recorded with every opportunity. I should also point out that the breakout for the Brazilian market at the beginning of the year, which you can see on hindsight, has held with the support here. Anyway, so the breakout is still intact, and we can see that at the breakout point, the Brazilian market did meet the minimum requirements for the ultimate Moade breakout, as we can see right here. RSI was above 69.1, and we can see that one of the MACDs, if not both of them, were just breaking out to 3-year highs, which might explain why the market has been stable to bullish for 2019. Now, what I'm going to do this weekend is keep some of the comments I have here on the TSX. For example, I discussed the semiconductor index last week's SOX. I discussed SMH last weekend, XLF, BTK, the biotech index, the NIFTY, BANKNIFTY, EWZ, EEM, VT, EFA. Now, all of this IPAC. My comments remain the same from last weekend, so if you're interested in those charts, just take a look at the last week's market analysis video. As far as the US markets are concerned, this is the level to watch on dailies, weeklies, and more importantly, on monthlies. Additionally, my comments on GLD, GDX pretty much remain the same, and SLV. And if you want some more details, take a look at last weekend's market analysis video. SLV gives us a good snapshot. We can see that the metals should remain stable to bullish as long as this line is holding the recent weekly RSI lows, and as long as we are holding above RSI 50 on the weekly. If that's the case, if we are holding above the blue line of support, and if we are holding above RSI 50, the metals should be stable to bullish. Otherwise, the last thing bulls want to see here is a break below RSI 50 and a break below recent RSI lows line. Now, if we take a look at crude oil, we can see a little bit of a pullback on Friday, which might be consistent with the previous stall point. Take a look here where we break down off the highs of 2019. Take that break, draw our uniformity resistance line based on my uniformity method, an original method by yours truly. And we can see here, this is the last time we had a major stall point was here when it hit that level. And again, the key is a uniform action, which is that high there. And we've done the same thing here. So this could be a problem for crude oil. In other words, there is a recent daily closing high that now becomes the latest buy point. In other words, if this is going to move higher, then we have to clear the recent daily closing high from this week, and that is at 61.18. If the bulls are going to move crude oil above current levels, they need to clear that level. Otherwise, right now, this is not looking good in terms of a short-term direction. This might be where things stall. Now, this would be similar to USO, which, by the way, has a similar looking chart, but just so that we can see this, this is pretty much how markets behave. This uniformity method is legit. This is a breakpoint. And again, it's just a duplicating each other here. We draw a line from there, which is what I call the uniformity line. Anytime you hit that line with uniform action, it tends to be a rejection area. Let's test that here. Rejection of that high. Rejection with uniform action here recently. And for USO, that level is 12.78, which becomes the new buy point area to watch. So bulls need to clear that level. Otherwise, this might be setting the stage for a pullback. Keep in mind, if we take a look at the weekly chart, we haven't really cleared this topside resistance line. Well, I can do it like that. And there's another lower side support line. I can draw this from this high here. But you can see it won't take much for this to roll over and we stay below or within that wedge. So I'm not sure. So failure to break out with a new breakout might suggest that this is actually a potential stall point for crude oil. Which also reminds us, if we take a look at this break point here, where the market did respond with a negative move of that level, we can actually even say that the market is coming back to test that RSI level, as you can see. So if that black line and the blue line become resistance, then this is where it stalls. In other words, what the bulls need to do here is find a way to clear this level and move beyond it so prices can advance. Otherwise, this could actually be setting the stage for resistance and staying within this big picture wedge. Let's take a quick look at the cryptos, and we're going to be taking a look at BTC. And let's go to the daily first and foremost, and the daily did find RSI 30.9. There I go again with those numbers, 30.9. Anyway, 30.9 is pretty much the opposite of 69.1. Of course, you add the 2, you get 100. Oh boy. Anyway, so now one thing that we can say from a constructive, or from a just the look, we have lower prices, improving technicals, and again RSI 30.9 uniform activity support. That's good. At least that stops the recent slide. It would be visually similar to this period here, where we have lower prices, improving technicals, and RSI 30.9 uniform activity support, which at least gave some life on the short term with this move here. So we see something similar, which might explain this up day here. Now the best thing to do is, if you want to play this, you want to play short-term trade, you might want to wait for it to clear this recent daily closing high, and that might give you a reason to be bullish. So you need to see a breakout on the daily above these highs for the day, highs for the week, at least for a chance of moving high. Otherwise, I wouldn't really be pounding the table by any means. On the weekly, and this is a little bit confusing, but could be worse. Why? Because we held this recent weekly closing lows. The market did spend some time below it, but has turned positive. In other words, this is turning into a good weekly support for Bitcoin. That's all the bulls can ask for, to be honest. And if we draw a simple line connecting recent or previous highs like that, we get this breakout point, which corresponds with this area, which ultimately, as we can see, led to a very strong sharp move as far as this recovery is concerned. So we take that info, draw our support line, something like that, and the market has bounced on this already. So we can say that as long as we are holding above this blue line, this is looking constructive for those who are bullish. Ultimately, the last thing the bulls want to see is a break below this blue line here. Now, that's the bullish scenario. There's a bearish view. And of course, these markets can get complex, but we can see that there was a break point somewhere here. That break point was instrumental in taking cryptos lower right here. Now, we take that line and draw a uniformity line, and should be something like this. Notice how this was a buy point here above the red line. This powerful weekly move, it turned into support here. We broke below it here, and we saw some shallow resistance there. So until we move above this red line, the cryptos are sideways at best. It's another way of saying what I was saying on the daily. You'd need to see a breakout above the recent range. That breakout is needed if the cryptos are gonna see any recovery move to the upside. And of course, on the monthly, we continue watching that RSI level. Anything above 50 is constructive and stabilizing. So anything above 50 is good. Movement below 50 would lead to a massive plunge. So that RSI 50 is going to determine the behavior on a big picture month-to-month time frame look. Let me give you one other viewpoint, which is this breakout here. A very powerful breakout on hindsight, because it's somewhere right there. That was a very nice entry on hindsight right there. That was in late 2015. Now we take that information, see whether we can use it, and it's gonna give us that point. There's a break here, which is this period. We recapture the blue line, which is this nice entry here. So what I'm trying to say is that whatever happens around this blue line should determine the next major direction. So let me remove all that so we can see it clearly. So this is a line to watch. What the bulls want to see here is holding on this blue line and the market coiling up. That would lead to a nice multi-month recovery. And the last thing bulls want to see is a break below that level, because that would suggest lower prices in the months ahead. This is Eric Mwadhi with Mwadhi.com. As always, good luck, peace, and blessings. E-A-C-S.